Hello nieces, hello nephews, it's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. Welcome back to Uncle Charles' trading channel where we cover the price action unbiasedly like a sheep. Bah! Oh guys, look at this. Exhaustion gap, breakdown of critical support. Uncle Charles raised a question yesterday, and I said, will history repeat itself? And we looked at history. When I say history, I meant last year, where we had a bullish January into a bearish February. And look at how we ended January. Exhaustion gap, breakdown of critical support. Guys, don't be offended my thumbnail. I got a crying bull on there. Just have a little fun with the thumbnails, guys. I had a crying bear the other day. Today I got a crying bull. All right, maybe one day I'll make a crying sheep, like when the market just chops in a very tight range. Then I'll just put a crying sheep on there. Okay, if it makes you guys feel better, okay? It's just a thumbnail. I tell you this, Ron Walker's probably having the time of his life right now. Because, I don't like to call tops, guys. But the signs are there. And what do I always tell you guys? Don't call tops, call the traps. And a lot of time these trap setups, they tend to put in tops, they tend to put in bottoms. We cleared that 490.5 level. That's a fib extension level. We got two closes above it, 2 days in a row. Today, we got below it. I mentioned to the group, as long as below 490.5, we are in false breakout territory here. And thanks to FOMC, pushed it right down. We got a bunch of trappy action on FOMC, but ultimately the bears won. As you guys can see, big body red candle finally broke down that 484.5 level. So we got an exhaustion gap, false breakout setup, and a false breakout setup based on this critical level. Hey, I don't want to call it top, but if you ask me, are the signs there that a top could be in? I'll say yes, the signs are there. So on today's video, we're going to talk about what the price action needs to do to keep the possibility of a top being in, to continue to be in, and what bulls need to do to kill this momentum. Okay, but before we do that, I want to talk about FOMC. Look at this beautiful price action. I mean, if you're a biased trader, you probably had a terrible time. But if you're a trap trader, you may have had a better time. Okay, let me explain. 2 o'clock right here, big red candle, decent red candle right here. The initial reaction to FOMC, right? 5.5, whatever. And then boom, broke down my 487 level. That's a level I was watching. Gave us $1.50, moved down to 45.5-ish. I had a target of 484.5 to the 485 zone. Didn't quite hit it. But what do I always say? Trade with the traps. And what happened? Boom, false breakdown setup, recaptured 487. You want to enter as it recaptures. It is risky, especially during FOMC. But hey, it's trading, man. You got to be willing to take some risk. Recaptured, false breakdown setup, gave us a level-to-level move up to 489. Remember, Uncle Charles always say level to level, level to level. If you want to go for home runs, use your runners. But other than that, level to level. Okay? 487 recapture gave us a decent level-to-level move. But then what happened there? We broke down 487. False breakout setup. From one trap to the next. You play the traps level-to-level style with runners because you guys never know. Look what happened. You get that false breakdown and hit one of the targets. You never know what could happen. It could break through, of course, which would be great for bulls. Or shit like this could happen where it hit the target and pull back. That's why I say level is so darn crucial because you just never know what the market's going to do when it hits a level. So anyways, false breakdown setup, level-to-level move. False breakout from there where we broke back down 47. It dropped and never looked back. And what happened at the end of the day? Closed below 484.5. This is an exhaustion gap followed by a breakdown of support. What happened the last time we had an exhaustion gap? Let's take a look. July. Look at July. We had a gap down. That led to a breakdown of support, and it led to a beautiful move to the downside. It started the correction because we was bullish. We were bullish, right? We was bullish from October 2022 all the way into July. Then from July to Halloween time, We had that correction, and then Halloween time, bears got the tricks, bulls got the treats, and we went to new all-time highs. That's what happened last time we had an exhaustion gap, and now we got another one that led to breakdown of critical support level. Very possible that history could repeat itself, where early February into March it's bearish. Okay, and look what happened July. Now, do I think this is the top that's gonna lead? The top like 2021 that led to a big massive correction. I don't know. It could be a small correction like July, which would give bears time to have some fun. And bulls, don't be complaining. Y'all been kicking the bears' butt for quite some time. We need to let the bears have some fun too, okay? Anyways, so yeah, let's get to the point here. I feel like I'm blabbing at this point. I hope you guys got some value in it. It's just stuff we can learn for the future. Trade with the traps. So yeah, breakdown of 484.5. So bear case scenario is straightforward from here. As long as below 484.5, there's no reason to be bullish. Yes, I know the overall trend is still bullish, but hey, we're traders, we're short-term traders. So as long as below 484.5, it's very possible that we can head down lower, and this correction could, go back test previous levels. Okay, stay bearish below 44.5. Today's low was around 482.86. I had a zone there around 42.5 to the 483 zone. If that levels fail, 480 is the next critical level. That's the 2021 high. The next critical support level to watch around 480, and then 478.6 below that. That's a fib level. All right, those are the next levels. And if they fail, we could get deeper pullback. You see this white uptrend line that I had? This white uptrend line since November. So to back test it as support, that will be a drop all the way down to 476, okay? And even if we get this drop down to 476, that would still technically be overall bullish still. But hey, I'm telling you something. That from where is that now down to 476, that's a very nice tradable move to the downside. I'll tell you that, okay? But anyways, below 44.5, stay short-term bearish, right? That's the bear case scenario. Now, the bull case scenario, we got to recapture 44.5. Like I always say, trade with the traps. Trade with the traps. Somebody make a song about it. That's the hook right there. If 44.5 recaptured, play that false breakdown setup, because look at that RSI. Okay, I don't stress the RSI that much, but it does have some value to it. And the RSI it's been reset. It's not in overbought territory now. So we don't call bottoms, right? We call for false breakdowns. We call out the traps. We don't call tops. We call out the traps. So we recapture 44.5. That is a false breakdown setup that would be bullish, and that will put higher levels back in play. 487, 489, 490.5 all-time highs, and possibly new all-time highs. Okay? So below 484.5, stay bearish. Above 484.5, that's when you want to get bullish. Trade it unbiasedly. Speaking of bearish, dude, look at QQQ. This is more than an exhaustion gap. Okay, because SPY gave us an exhaustion gap. Y'all see that exhaustion gap? I bet you bears like the exhaustion gap. But you guys should love what QQQ is showing, because this is more than an exhaustion gap. You guys see this little thing right here? January 24th to January 30th is trading candles. That's an island. Okay, that's an island, not Hawaii, and definitely not Rhode Island, but that's an island. You guys know the island reversal pattern? That is a bear. In this context, this is a bearish reversal pattern. Okay, we get the gap up, we consolidate for a little bit, creating the island, and then we gap down. You guys see the island. In this context, it is bearish, combined with an exhaustion gap, combined with breakdowns of Fibonacci levels. If you ask me, it's the top end, uncle? Hey, I don't know, but the signs are that it is. Okay, that's the best you're going to get from me as far as predictions and calling tops go. Anyways, stay bearish on QQQ as long as below 419.71. Okay, remember, even in down moves, we could get some relief bounce to retest some breakdown levels. So watch that 419.7 level. As long as below, bearish. Bearish follow through would be to break down 417. And let me see, 417 and 415. Okay, break down 417 and 415. That's the bearish follow through. Okay, watch out for some chops, because we could get some chops. Hopefully we don't, but we could get some chops. But overall, below 419.7, I am bearish. Breakdown of 417 and 415 would be bearish follow through. Either keep holding puts or look to enter puts. As far as calls go, look for calls at 419.7 and 421.7 recapture to put upside targets in play, possibly to even fill the gap around 425.5-ish. All right, guys. NVDA is chopping. NVDA is just chopping. Even when it's chopping, it's still tradable. But overall, it's just chopping. Now look at those wicks. All around my 23.6 fib level, around 607.5-ish, okay? That's where the big buy zone is, okay? For it to show follow through, 618, 620, and 622.6 all must clear tomorrow to show follow through, bullish follow through. Now, 615, 613, and 611.6 fail, it's likely we go back down to 607.5 to retest as support. But I tell you this, if that level fail, I am bearish and favoring a deeper pullback, possibly down to 601 to form some type of neckline. It could be possibly forming a head and shoulder pattern. We'll see. All right, guys. Tesla, to me, it's still bearish. It's still bearish. It didn't recapture any critical levels. As a matter of fact, we got some selling pressure from critical resistance level. For me to be bullish in favor of relief rally, well, you see this gap down. We've been consolidating a little bit. It'll need a gap up. You guys remember the island reversal pattern? Well, that would be a bullish island reversal pattern if we can gap up. That would make me bullish. But as far as the levels go, 188, 190, 192.3, and 194 are my resistant level. You guys can see this pivot low back on Halloween time was around 194. So that level must recapture to mess with this bearish trend structure a little bit, okay? Because if it recapture 194, I would favor a bottom, not the bottom, but a bottom, which should possibly give us a relief rally to the upside. Otherwise, as long as below those levels, I'm still overall bearish, and the bearish follow through I would need to see is a breakdown of 186 and especially 184.5. Why? Because that's my fib level, and I love fib levels. I love fib levels. What's next? IWM. That's looking bearish to me. Okay, I can say this with a little bit more confidence that IWM is looking bearish to me. Why? Well, you guys see this pivot high. You guys see this uptrend with this pink trend line. We broke down the pink trend line. And this pivot high right here that we had on January 29th is looking like a lower high. Why? Because we broke down critical support level. So I'm bearish on IWM. I'll tell you straight up like that. As long as below 193.3, I'm bearish. Follow through 191. Needs to break down to put lower targets in play. We could get a deep pullback down to 184.5. And below 184.5, holy moly, is it going to get even more nastier. The only way for me to be bullish is 193.3 and 197 recapture. That's his pink trend line. 197 got to recapture to put 199 and 201 back in play. Otherwise, it's looking bearish. All right, speaking of looking bearish, Apple's looking bearish. You guys ever seen a bull market that's below the 50 daily moving average? Yeah, you did? You're lying because there's no such thing. But I'm just saying, that's bearish. Look at that. We broke down the 50. Look at that, showing follow through. 200 is looking like a magnet. 200 is looking like a magnet. We also broke down another fib level around 186. As long as below 186, I'm bearish. Follow through. Break down 184.4. Today's low. Break that down. 200 daily moving average is coming. And where's that 200 daily moving average? It's around 182. It's around 182. So breakdown of 182 would be even more bearish. We got that double bottom of around 180. If that breaks down, of course, that would be even more bearish. That's the bear case scenario. When we turn bullish? When we get a false breakdown setup. So recapture of 186. We'll put the gap fill around 188 in play in the 50, which is around 190 plus. 190.8 actually. I'll be a lot more bullish if we can recapture that 50 daily moving average to put higher targets in play. Maybe go back to all-time highs. But otherwise, stay bearish as long as below 186. AMD. Nice pullback. Getting some buying pressure from the 178.6 Fibonacci extension level. That's around 164. If you are a bear, you want to see 164 break down to trigger more downside. Okay, should give us a deep pullback if 164 fails. Now, if you are a bear, we got that. We need false breakdown setups. It's around 167.6. So 169, 171, and 172.5 are resistant levels. Those levels must recapture to be bullish. Okay? Amazon showing some very good selling pressure, got some rejection from Fibonacci level, broke down another Fibonacci level, 155.6. As long as below, stay bearish. 20 daily moving average, which is around 153.8ish. To give it a 154 zone would be in play. Below that, bearish at 151, and then the 50, which is around 151, and below the 50, 149.8 and 147ish would be in play. Okay. 155.6, 157, and 158.4 must recapture for me to favor some type of bottom in. Meta, that's a nice wick right there, but it's going to need to show some more follow through to be bearish, which is to break down 188, 386, and 384. Those levels fail. We're bearish with 380, 378, and possibly a lot lower in play. For the sell-off to be over, it needs to recapture some level. 392, 394, and definitely 397 all must recapture to be bullish on Meta. Netflix looking bearish. Well, for the short term, guys. I'm a day trader, guys. We're talking short term here. Look at it rejected from my fib level. You guys can see that wick. Guys, see that wick rejected from my fib level. That's around 571.7 ish. Not looking bullish to me, at least not yet. 560 is support. If that breaks down, we'll likely drop it down to 555, maybe even lower, down to 548.5. There is a gap around 545 ish. Okay, I see where the sell zone is. Resistant is at 565, 567, 570, and 571.7. For me to be bullish, gotta get above 571.7. Google's bearish to me as long as below 142.3. Break down 141 and 139. That's bearish follow through. Okay, he's gonna have to recapture 142.3 and 144 to trigger longs. Put in 146, 147.3, and 150 plus back in play. Otherwise, stay bearish if it breaks down those support levels. Microsoft breaking down support level 402.2, broke down big time. Next critical support levels at 395.4. If that fails, a retest of the white trend line should be in play, which is at 390. Okay, that's kept Microsoft up in an uptrend for quite some time. So those are going to need to step up around 390, because if 390 fails, bearish with 388.6 or lower in play. For me to trust about bottom is in, levels must recapture. And it's around 397 right now. So that means 398, 400, and 402.2 are resistant levels. Those levels must recapture for me to favor a bounce in. No false breakdown, no calls. SOXX looked like it rejected yesterday's breakdown level. Filled some gaps, whatever you want to call it. I tell you this, 584 is critical support. That levels fail, we are likely dropping down a lot lower, maybe down to the 579 or 574 level. All right, it tried to bounce today, but we got selling pressure, so it needs to try again. If bulls want to try again, it needs to give us some big body, green body or something, not this wick right here. So it's gonna need a recapture. It's gonna need a recapture 586, 588, 590, and definitely 592. Those levels recapture will likely pop up to 597 and maybe break back above 600. All right, guys, here's a Darkpool order for SPY. 54% of activity came in at 483. Let me look at the 483 one for 5.1 billion in premium. Holy moly, at 483. Add that level to your chart. That's a lot of money right there. Usually we see like 1 to 2 billion, right? This is big. 5 billion is big. That's above average. 3.4 billion is a little above average. It came in at 490.97. Add those levels to your charts. All right, trade them unbiasedly. Let's look at the flows. Here's the SPY. SPY was SPY bearish yesterday? I can't even remember. And well, it's bearish today. SPY's bearish today. Triple Q agrees. It's bearish. IWM, once again, not agreeing. Once again, is not agreeing, but it's not necessarily bullish because IWM disagrees with Triple Q and SPY like almost all the time. NVDA is bullish though. Tesla is bullish. Apple Apple's bearish. Big heavyweighted stock right there. AMD is bullish. Amazon bullish. Meta is bullish. Netflix is bullish. Google is bearish. Wait, hold on. Let me check Google with the L. That's bearish as well. They're usually the same. Sometimes they're different from each other, which makes no damn sense to me. But usually they're the same. Microsoft is bearish. And SOXX. You get anything from SOXX? Nothing for SOXX. All right, guys. Thank you guys so much for watching. I appreciate you guys so much for being here. If you want more content from Uncle Charlie, definitely consider joining my Discord. It would be an honor to serve you guys there. All right. Other than that, I hope you guys were able to be green. I know a lot of you guys are bearish. So I hope you guys were happy with today's price action. You know, I don't like that bias trading stuff, but I love it when my viewers are making money and you guys are happy. That's what matters more to me. All right, guys. So thank you guys. Peace.